Welcome to the 8th episode of the X podcast Bitcoin as Store of Value. Hi, Francesco. How are you doing?
Hi, fine. It's a Friday, but we are still here to talk about Bitcoin, even after a tough week. That's remarkable.
Yes, actually, also today it's quite a good day. 67,000 already, and Bitcoin on exchange is also decreasing. So at the end, it was a recovering week as well for Bitcoin. Meanwhile, maybe Francesco, we can comment on how we are doing. How we're doing with Bitcoin. So as I was saying, yeah, we have 67K. Plus, we had it was the deadline for the firms, the companies or investment funds to declare to report in the 13F filing. And actually, Eric Balkunas tweet made a post saying more than 400 companies get reported having IBIT, and for any company to have so for any new ETF to have already 20 company listed in the first 3 months is already a big deal, and IBIT had already 400, so big numbers. What do you think?
No, yeah, we are still in a range, but given that the range is holding and actually had a good surprise today, price movement, we have to keep an eye on there is a positive news also. I saw the fact that MicroStrategy got into the MSCI, the global ETF. So it will, of course, the market knows that the higher the stock MicroStrategy goes, the more they're borrowing. So that will help the price of Bitcoin directly. And I cannot even imagine when it is going to get into S&P 500. That will be like another ETF. And a big one as well, because it's leverage. It's going to be leveraged ETF. So that's good news. Another one is coming is the dismissal of the rejection of the Ethereum ETF. That really now the gap is widening, and then I don't care, but we cannot say that it won't help the Bitcoin price to pump even more, because there will be a reallocation of capital. Many people will dump Ethereum. That's a guarantee. So I don't know, maybe it's in 1 week or two, the final deadline, and that will influence the price a lot. A lot. I mean, relative in this range, let's say relatively a lot. I don't know. What do you think?
Same. So the deadline is the 23rd of May, so it's less than 1 week away. I agree. Likely, also we trust Eric Balkunas and James Seifer. They said the 99. They were the only one who were raised the probability for the Bitcoin spot ETF last year from 1% to 50%, then 80, then 99. And now they're saying it's close to small or to none because of a series of topics. For example, the SEC not replying to them, Ethereum seen as a security. I also think it will help not only the Bitcoin narrative, but finally, what I think most of Bitcoiners are waiting is really a differentiation between what is Bitcoin and what is crypto, because most of the people, especially if they are not well educated on Bitcoin, they think they are the same or in the same bucket. Nothing can be more far from the reality. They are two completely different asset class. Ethereum belong to all the other cryptos, altcoins, let's say. 99% of them are a scam or no utility, and anyhow, whatever utility the other can have, it can also all summed, it cannot be even one of 100 versus the use case of Bitcoin as a store of value. So firstly, I think for me this will be the most important thing. People will start to understand more the difference between Bitcoin and Ethereum. Second is on the price. We see in fact Ethereum versus Bitcoin decreased by 30% in the last year. It went from 0.07 to 0.45. And I think at one point there will be not bank run, but Ethereum run. When maybe it goes to 0.042, 41, 40, more and more people will start to say, okay, better to leave the sinking boat and better to go to the real boat. Real boat will be the Bitcoin.
Yes, exactly. I mean, the Ethereum, as you define it, is a run is a fantastic. Anyway, yeah, that's true. Because me and you, we think like that. We are sure. I also told the other Bloomberg reporter there when we had say James tweet immediately after. To me, it was clear. I mean, I don't think it's going to get approved, but now it's clear and clear. But at the beginning, when they issued the statement of approval of the Bitcoin ETF, Gensler, it was clear in his words that he did think that Ethereum is a security, therefore would have never approved it. Anyway, me and you think, and maybe many people in this room think that these guarantees are rejected, but I've seen a couple of polls here on Twitter with thousands of votes. Maybe they 50%, they are not still sure about the rejection. So there is room to go down for Ethereum even more, because they will find out very soon. Yeah.
Yeah, yes, true, because many they're still in doubt, so they are still holding Ethereum and thinking they will be approved. I think also one problem from SEC is not only Ethereum, because okay, if they approve Bitcoin, it's not consequential that they have to approve also Ethereum, because Ethereum is a completely different thing. But if I approve Ethereum, then why not Solana, or why not in the future Link or other altcoins? So I don't think the SEC want to have 10, 5 or 10 spot ETF on all these crypto. So it would be also easier for SEC to have only Bitcoin. But even on another side, even if it is approved, I don't see so much institutional people from the institutional world, these insurance funds, pension funds, and for under 1K to move a portion of the portfolio in Ethereum. Like, he has another narrative, is more smart contract. It's more for people from tech or people who want to build things on the blockchain. I am very skeptical on this. I think the only real use for the blockchain, it should be called time chain, is creating decentralized money. But it's not capturing even the people who want to store the value in an asset. Here. Yes. Hi, we have now Anthony Scaramucci in the call. Hi, Anthony. Welcome in the call.
Hey, I'm so sorry. I was on the Google Meet. I apologize. I got the link screwed up, guys. I apologize for that, and I appreciate you having me on today.
No problem. Thanks, and welcome to here. We're really happy to have you here and to speak with such a famous investor and founder in our X space. We have also Francesco in the call. We will do the interview together.
Okay,
and,
terrific.
First thing, Anthony, would like to know from you. I listened to many of your interviews in CNBC, and also the last debate, gold versus Bitcoin. You stated that you started the exposure, your fund started the exposure in Bitcoin in 2020. It would be great if you summarize the path from 2020 till the approval of the ETF, and then what happened from when the ETF were approved to today.
Okay, well, thank you. I think the first thing I would say is that I've spent 36 years on Wall Street, and so I consider myself a traditional finance person, and I'm a 60-year-old, and if you're a 60-year-old on Wall Street, you hang out with a lot of white males, okay? And white males are generally very boring and are very stuck in their ways. And so when I presented the idea of going into Bitcoin a few years back, it was met with a lot of resistance from clients, from wirehouses, from risk management people, and basically I did it anyway, with my team. And so we made very big, and when I say big, for somebody like Skybridge, we put 7-8% of the portfolio in Bitcoin back in October of 2020, when the coins were trading 16, 17, 18,000. Met with resistance, took a lot of heat, and of course, Bitcoin did quite well in 2021, 69,000 by November as a result of the Bitcoin ETF being approved. And then, I went to law school, so I thought it was very certain that several months after the futures ETF was approved, they were going to approve the spot ETF. But I personally, frankly, got that wrong. I didn't understand the politicization of the SEC and the horror show that Elizabeth Warren and her rube Gary Gensler were going to create. And so they delayed and they blocked the Bitcoin spot ETF approval. Now, people in the Bitcoin community don't like me saying this, but I'm going to say it anyway. Weirdly, even though what they did was legally incorrect and they disavowed the administrative law in the United States that says that an administrator can't be arbitrary and capricious with the administration of the law, they lost the court case to Grayscale. The year plus that it took to get that ETF approved actually helped the industry. And people say, well, what the hell do you mean by that? Well, many people were over-levered. Many people were committing fraud. Sam Bankman-Fried, who I think it's well documented, I had a relationship with. He was exposed for the fraud and the misallocation of funds from his investors into his personal accounts. And this probably would not have happened had they immediately approved that cash ETF back in 2022. And so weirdly, this series of events has actually helped the industry. It's helped to strengthen the industry. And over that time, a group of us reached out to Larry Fink and his team, Robbie Mitchnick and et cetera, at BlackRock. And I would say Pete Brigger, I don't know if anybody knows who he is, but he's the CEO of Fortress, was very influential in talking to Larry. And what I would say about Larry, I think he's one of the most accomplished financial services executives in the world, primarily because he's not dogmatic. He's willing to change his mind. And so he was negative on Bitcoin, said to me personally at an event in Abu Dhabi that he was negative. About 2 years later, he got orange pilled and he was turned positive on Bitcoin. He agreed to allow his team to apply for a Bitcoin ETF, the spot ETF. And his team came to Skybridge. My team gave them $10 million. And so we were the first outside money into the BlackRock Trust, which got converted into that ETF. And so this tribulation, these trials and tribulations, this odyssey that we've all been on, while painful because of the volatility in Bitcoin and the uncertainty in the digital asset space, has been rewarding because the people on this call, or the people that are just learning about Bitcoin, but the people on this call that have been investors over the last 4 years have knows that Bitcoin is like a dog. It can age a human being, okay, like a dog, I should say. We age 7 years for every one Bitcoin year, and you guys know exactly what I'm talking about. This asset can drive you crazy, but if you stay in the asset, you can be very well rewarded. And so the BlackRock ETF, the Fidelity ARK ETF, and others, I think, is providing money flow and demand for the product. And I want to let you ask another question, so I'll finish by saying this. Do not underestimate Wall Street's power in selling things. I'm 36 years on Wall Street. Wall Street is a great selling mechanism. Wall Street will put legions of people out into the world to articulate why Bitcoin should be part of their portfolios. And that's happening now. And with Bitcoin just completing another halving cycle, you have supply down in Bitcoin and you have demand and money flows up. And so positive news Fed rate cuts, all these types of things will dramatically affect Bitcoin. So I'm in the Kathy Wood camp that at some point Bitcoin gets up to gold's market capitalization. I'm not saying it's going to happen immediately because that's not how markets work, but I do think that we will see it, over the next decade. And I do appreciate being on, but that's sort of a pretty much a historical recap of where we are, and I like where we're going.
Thanks for the recap, Anthony. Also, thanks to be one of those who were asking Larry Fink to start the request for the Bitcoin Spot ETF. He also mentioned in June, July that the reason why they start the approval is because many institutional investors they were asking for it.
Yes.
And I think what in the Bitcoin world at the beginning they were more skeptical, and now it's less. It's becoming also or in favor or neutral, because some they still think a victory of Wall Street over Bitcoin, and is not respecting the nature of Bitcoin. But the core feature of Bitcoin remain the same. 21 million supply, 10 minutes block. It's just the offering. It become 1 or 2 order of magnitude higher. Let's say the total addressable market that we can reach with people who want to be exposed in Bitcoin, it's much higher. What do you think?
Yeah, I listen, I'm in I am very positive. I just think that I'm not a great expert on timing, so I can't predict the timing of all that, but I can tell you something happened this week that should not be underestimated, Alessandro, and that is the state of Wisconsin had to disclose in their filings that they own $100+ million of Bitcoin. And I'm just going to tell you how this works. Okay, people are looking around and saying, okay, is Bitcoin an asset class? And if it is an asset class, and I believe Wall Street has said, yes, Bitcoin is an asset class. So if it is an asset class, it'll eventually be included in a tactical and strategic institutional asset allocation, meaning these guys are benchmarked against each other. They have part of their portfolio in bonds, part of their portfolio in stocks, alternatives, private equity, gold. And now will Bitcoin be slivered into that? Will it be a 1, 2, 3% position in Bitcoin? And I think the answer to that is yes. And so what the state of Wisconsin is telling you is, hey, if I'm not long Bitcoin as an institutional investor, I'm short Bitcoin. And so I want to get in there before these other institutional investors get in there. And so you're going to see more announcements like that in the coming months. And I can tell you, because I have a lot of friends at BlackRock and other places, these guys are working feverishly with big institutions to explain how and why they are underinvested in Bitcoin now. And so, I like the trajectory. I just can't speak to the timing. That's the big issue. And while we're talking here, Bitcoin is closing in on 67,000. It was over 67,000 this morning, but there's no reason why Bitcoin can't be 100,000 by the end of the year. And so, for me, $100,000 Bitcoin. So you mentioned the 21 million is a $2.1 trillion market cap. Gold is at 16 trillion. And so you're still, you guys do the math with me. We're 15, 18% of gold. I'm 60. There are people on here that are listening that are younger than me. But there's a 25-year-old right now that just got his first job on Wall Street. He's very comfortable with digital assets. And someday he's going to be 35 and he's going to own more of these assets. And by the time he's 45, this is going to be equivalent to gold in terms of the storage of value. And I think it's very important for people to understand that. So we're sitting here, gold at 16 trillion, Bitcoin at 1.5-ish trillion. I like that. I think we've got a 10x in Bitcoin. And so I'm going to sit here patiently and ride out whatever near and intermediate term volatility there is on the way there.
Yeah, Francesco?
Yeah. First of all, I want to tell you I'm so happy to be interviewing you because I still remember the days back then during the pandemic when you were one of the few on CNBC just pitching in favor of Bitcoin. I believe also at the same time or even before Michael Saylor those days. So it was amazing. I want to ask you. Do you think that which one is the best feature of Bitcoin, which represent an interest, interest to be interesting for Wall Street? Do you think is with the correlation from traditional finance, from the other stocks and the assets like the Nasdaq, or the volatility, which beats inflation, or also enhances the performance of the portfolio, or a mix of the two? In particular, if these features make sense to fit better for a certain kind of investor, like insurance company, or versus family office, if there is a gradient, and if, in your opinion, these ETFs should target different investors by highlighting a certain feature like the correlation or something else. What do you think?
Well, I mean, all of those things that you're mentioning are great features. I think for Wall Street, I think the thing that has people when they let me start out by saying this. I think many people on Wall Street still do not understand Bitcoin, and I think when you're hearing people on Wall Street be negative or critical of Bitcoin, it's generally people that have a superficial understanding. And I have found when people take a deep dive into Bitcoin, and it's not just reading the white paper, but really sitting down with mathematicians, computer programmers, understanding the history of money, reading books like Neil Ferguson's The Ascent of Money, you start to realize that the technical properties that were put into Bitcoin meet all of the things that are on the checklist for what human beings like in their money. And, it's transferable, it's trustless. We don't have to rely on other people for it. It can't be corrupted by a central bank or a politician. And so when you look at this and you look at the immutability of Bitcoin, you run towards Bitcoin. You don't run away from it. I don't know anybody that's really done the deep dive and said, oh, yeah, no, I hate Bitcoin. Here are the reasons why. They only give superficial arguments. So I think for the Wall Streeters, I think the thing that's most exciting for them is like understanding the arc of adoption of Amazon, or understanding the arc of adoption of NVIDIA, or something like Tesla 5 or 10 years ago. They can understand this arc of adoption. They're looking at an adoption curve where Bitcoin's at 4.7% global adoption, which is roughly where Web 1 was in 1999. And they're saying, my God, if Bitcoin goes to a 15% adoption or a 20% adoption, and given the supply constraints of Bitcoin and the finality of supply, it's the only asset. Let me quote Saylor for a second, Michael Saylor. It's the only asset that we're aware of where you can't create any more of it. And we're mining gold, finding it around the world. A meteor could hit and we could get more gold. We've been able to find more oil and extract more oil from the society, but this has been digitally mastered to be finite in terms of its supply. Okay, and so we all know how human beings operate. You'll have exponential demand for this if it gets adopted, and you have finite supply, so that will drive price. And so Wall Street's looking at this saying, whoa, this is a store of value. Only 5% of the people have adopted it. A very small percentage of the people in the world understand it. As the adoption curve and the learning curve goes up, the price is going to go up. I'm here early. This is my opportunity. I may have missed Amazon. I may have missed NVIDIA. I may have missed Facebook, Google, or Tesla, but I am not going to miss this.
Yeah, so the network effect on top of a scarce asset.
Yes, sir, the network effect.
thanks, Anthony, to highlight the point of education is something that we also believe, and we are hearing more and more. As you said, most of the critics that we get from Bitcoin, it is it has not intrinsic value, and this is a nonsense because money is not an intrinsic value. There are properties, some mentioned by you, or it used too much energy, used by criminals, it's not backed by anything. I totally agree that people are not willing to do the work needed. And I think for the institution, for the financial world, there is another reason why they are still, many of them, they're still neutral or against, because it's hard to admit that you were wrong. These
Yes.
people, they have, for years, they said bad about Bitcoin, and it would have been better if they were neutral, but they exposed themselves saying against. Now to say, okay, then I was completely wrong, and these Bitcoiners were right the whole time. It's a hit on the ego, and they should be humble enough. Many of them, unfortunately for them, they are not, and likely they will be among the last cohort to understand, to not to understand Bitcoin, maybe to admit that Bitcoin is the best store of value. Do you see also this?
Yes, no question. I mean that happens in our society. It's happening more and more now. We talk over each other politically. If we change our minds, we're called flip-floppers. Somebody like Jamie Dimon that's called Bitcoin a decentralized pet rock or a Ponzi scheme. It'd be very hard for somebody like him. He's one of the smartest people I know. It'd be very hard for somebody like him to change his mind. I'm not saying it's impossible, but he's also got a company, one of the largest, if not the largest commercial bank in the world, that he's trying to protect that franchise. So I get all of these things. But here's the thing I will say to you. The marketplace has a way of taking everybody's intellect and putting it into the marketplace. And so the marketplace has told you that something that started for half a penny or less than half a penny 14 years ago is now worth $67,000. So you guys referenced that debate I had a few weeks back with Peter Schiff and Nouriel Rubini. These are long experienced market players. So what they're saying, I think, is odd, frankly, because they're saying, well, this is just a gambling token, and this is a greater fool theory that somebody believes the price is going higher, so a greater fool is going to buy this thing from you, and that's the reason why you're going to buy it. But if you examine greater fool things like tulips, things like that, uh, you know, they flame out. They don't have 14-year runs. Okay. And the reason why this is so different from that, and the reason why it's so important to explain this to people, is that this is what money is. What is money? It is a technology that we use with each other to trade so we don't have to barter. What is money? It is a way for us to keep score in a society. We have double entry accounting, and we have assets and liabilities. And when you log onto your smartphone and look at the digits in your bank account, all they represent are digits in your bank account that you can use to exchange with others for goods and services. It's a database, it's a spreadsheet. That's what it is. And if I told you that I now have a hardened and I have a fully decentralized, unhackable spreadsheet where I can keep track of my value and your value, and I can transfer my value to you in exchange for goods or services, and I can do it digitally and quickly and efficiently and relatively costless, that is a better technology. That's like me telling you in 1985, it took me to call my mom a connection into the AT&T operator from Europe and $5 a minute. And now I can log on to any internet cafe in Rome and call her for $0 a minute. This is technological advancement. And so when you really get this and you really understand this, you got to own a piece of it. And for me, I own a lot of it, and I have a big portion of my net worth in it. And I'm not telling people to do that, but I'm, you know, I'm here looking at it every day. I tell other people 1, 2, 3%. If I told those people that in 2010, if you own 1% of this, you'll be rewarded. You know, if you bought 1% and you held it, you got 6% now of your portfolio in it. You know, I mean, so to me, you gotta understand it and you gotta be patient. But you also have to know it's not a gambling token and it is not a tulip bulb and it is not a Ponzi scheme. And I think the marketplace is telling you that as well.
If I can, on this point, how do you see the current state of the regulation in the US? Because here we are witnessing something very different. From one end, there was the ETF approval, the likely the security as a Ethereum ETF rejection. Then we have a start of a war against self-custody. And on the other hand, we have the US president issuing a statement of threatening a veto if the banks will be allowed to hold the Bitcoin. De facto, like allowing maybe wealthier players and investors, people used to invest, to utilize the ETFs of BlackRock, but maybe the normal people, the working class, will be more confident to use a bank and they will not be allowed. Mm-hmm. Is there an agenda, in your opinion, or is just that the ruling class don't know and they take decisions just like that?
I gotta tell you, it's a really good question, you know, and you know, if I were the regulatory czar of the United States and I could fix these problems, I would certainly allow banks to custody Bitcoin. I would certainly allow for banks to make Bitcoin accessible to people of all different economic classes. But you've got older people. You know, one of the unique things going on in the world right now is we have younger leadership in places like the UK or France, and we have ancient leadership here in the United States. I think Chuck Grassley, I think he's like George Washington's great grandfather or something like that. I guess he's never leaving the Senate. He'll be there when he's 160. But the point I'm making is you've got older people that are running these things that don't like change. And so Joe Biden, there's a legislation that was before the Congress this week that was going to repeal the restriction on banks from holding custody for Bitcoin assets. And so, in other words, giving the banks the ability to hold custody for Bitcoin, straight Bitcoin, not the ETF. And the Biden administration has threatened to veto this. And so, to understand American law, you know, it got passed in the House and the Senate, two necessary things for something to become federal law. But then it also must be signed by the president. The president has the ability, if he wants to veto that, at which point it goes back to the Senate. And then you got to get 2/3 of the Senate to approve it. So I don't know. I hope Joe Biden doesn't veto this. It was passed with 60 votes from the Senate. This is a very polarized society. Chuck Schumer himself, who leads the Democrats in the Senate, voted for it. He's also a New Yorker. He understands how important this is to the financial services industry here in New York. But, you know, if you're making the point, and I think you are, that if we opened this up to traditional banking, it would increase the adoption and perhaps it would also help the savings of lower and middle income people. I believe that. And so I would want that, but it's going to take some time because we've got a group of people that are hanging on for dear life for power in this country. And, you know, it's sad to see it, frankly, but that's where we are right now.
Yeah, I got it. It just at this point that they don't want to change because they don't know Bitcoin enough. I don't. Maybe it's like Bitcoin has conquered the financial firms, will conquer also the politics and the bank and all the other classes and compartments
Mm-hmm.
of the society.
Mm-hmm.
Yeah, maybe that's the answer.
Another, I think, point for thanks, Anthony, for saying a very good point on these political topics. Another point I would like to discuss is about for the future an inflection point for Bitcoin. In the Bitcoin world, we think me personally, also many others. At one point, there will be an inflection point, like from gradually till suddenly. Me personally, I think it will be somewhere between 20k and 160k, because firstly for two reasons. That most the narrative against Bitcoin will be significantly reduced. First reason is demonstrated that it's not dead. It was declared dead 500 times in the mainstream media, but it's not dead. Secondly, at 160, it will become the second asset, most valuable asset in the world. And I think at this level, all journalists or financial advisors who were against Bitcoin, they will think twice or three times before making statement against this one. And second, as you said, now there are many that are afraid. You also confirm, also Bitwise CEO, that there are many things behind the scenes that normal retailers are not seeing, but the institutions are moving, doing the due diligence. And no one wants to be in the first row, because at this point, if Bitcoin fails, they could risk their career. But at the same time, no one wants to be in the last row. So once it's agreed that we have 1 or 2% allocation, everyone wants to join. Do you see this path happening?
Yes, I do see that. I don't want to short shift you with a short answer, but I think what you're saying is the most likely outcome. Listen, we live in a world of uncertainty. I've been humbled by life. I've been humbled by markets. I've made my series of mistakes in politics. I've made personal mistakes. I've made mistakes in business. But I do think that is the most likely outcome. And guys, I have to apologize to you because I have my son's spring concert at 2:00 that I have to get to. Otherwise, I'm subjected to potential castration from my wife. And Alessandro would understand this because he's Italian. The thing you have to do as an Italian is avoid castration at all costs. So,
first
so
goal.
I'm gonna,
Yes.
if you're cool with it, I'm gonna take one more question, and then we could always do this again at another time.
Okay. Yes. Sure. I understand the priority. I totally agree. The last question will be: you refer to trading versus hodling. Actually, if you have, you can reply to two. Why you are in favor of hodling instead of trading? And the second, if I may, on you also referred that the store of value narrative, it's more important, the medium of exchange narrative, at least in the West world. And that's why also our podcast is Bitcoin as a store of value. So if you can elaborate on this, will be great.
Yeah, so I'll just say this. It could be because of the way I grew up on Wall Street. So I think this is an asset, and I think Michael Saylor, who's a friend of mine, would tell you this is an asset that's volatile. And you may be lucky a few times catching it in terms of buying it low and selling it high. But this is an asset that should be in your permanent wealth creation category. There should be a piece of digital property. You own real estate, you own other assets. This should be your digital property component. And what I would tell you is to hold it because we can't predict. And Saylor had a great piece out a few weeks ago. Please don't quote me exactly because I don't remember the exact numbers. But I think in a 365-day period, the majority of the appreciation in Bitcoin was over like 10 or 12 days. And his point was if you miss those 10 or 12 days, you missed big opportunity, big upside opportunity. So why do that to yourself and why have all of the emotion? Because one of the things about our personalities, we're living in 100,000-year-old pieces of machinery that haven't had a software upgrade in 100,000 years. Your phone went from iPhone 1 to iPhone 15 in the last 15 years. but your brain really hasn't evolved at all in the last 100 years. So you have fear and greed, and you have all these emotions that are swirling around in your brain. And to protect yourself from all that, just buy it and hold it and put it away. And I'll leave you guys with this one last thought, is that the dead people at Charles Schwab do better with their stock accounts than the living. And you can go Google that, you can look it up. But why do the dead people do better than the living people? They don't look at their accounts. Did you know that they can't access the account, not even through a Ouija board? And so what happens is if they own high quality things, they don't get sold. There's no arbitrary capriciousness or human ego or emotion driving the short-term decision making. So take it out of your own hands, take it out of your 100,000-year-old brain and put it away somewhere and don't think about it much. I think it's a very big message for people to think about this stuff long term. I apologize to you guys for having to leave this space, but I greatly enjoyed it. I hope you'll invite me back.
Yes, with pleasure. Thanks a lot, Anthony, to have been our guest. With pleasure, we can discuss further for another invitation. Thanks a lot. We appreciate it.
Okay,
And
God bless you guys. Have a great weekend, everybody. Bye-bye.
bye.
Yeah,
Bye-bye.
see you.
A great closure also. that people are performing better. I really like it.
Yeah, I mean, the explanation of why you shouldn't trade is something really valuable, because it's very clear from that slide. He presented a Bitcoin Prague, I believe, first time. Yeah, unless you are, it's very clear, makes clear that unless you are a high frequency trader, you have no chance to beat the market. So the most stupid thing you can do is trade. That's very clear. Even a 5 years old can understand with that slide. The simplicity, how Sailor explains difficult concepts and masters the financial, world by not only purchasing Bitcoin and leveraging it, but also by explaining to the people. So because the value stays in information in the digital age, and giving to the people the opportunity to grasp this information. Therefore, if they are smart enough to apply it, to benefit from it greatly, that's remarkable. He's a really nice person to do that. The majority of Wall Street traders and people, even their studies, their secrets, their models, they're never going to share with you. But he's doing that, and I like it so much.
Agree. I think also for many, it's like the urge to do something, because you feel boring or kind of stupid just holding, like, okay, I can do better. But in reality, it's the most boring activity, and also simple but not easy activity is the one who outperform any other setup on any other strategy.
Yeah, your only task as a Bitcoin, as a holder, somebody into this asset, is to prepare yourself to stomach drawdowns and to study for those moments. And when you are in these moments, like last year, we had 16K or minus 70%, you should have a real conviction. And conviction comes from knowledge. There is always another halving. There is this value. There's a network effect. There are the beautiful feature of Bitcoin that should arise into your mind if you have studied enough. So the only thing you should do is to prepare, to study it, and then be resilient enough during the drawdowns.
Yeah, totally. People will learn also by their mistake. I think we can invite also Anthony Scaramucci again for a second part. It was also great that I sent him a message like less than 10 days ago, and so quickly he was available to speak with us. Really enjoyed it. Should we go to the closure remarks, Francesco?
Yes, you already said we're going to do another one, and this one was a bit short, although it was dense of meaning. But given, let's keep it as an introduction to another bigger space. Maybe when Bitcoin is in a better position. Not that it is not good today, but he also, Anthony, believed that we are going to see 3 digits very soon. So it was great. The concept he expressed were very clear and helpful for the audience, for ourselves, for everybody I believe, and he was great. I still remember, as I told him, he was a really he had a strong conviction in Bitcoin since many years. So his knowledge will spread across Wall Street, I believe.
Yeah, I totally agree, and I think also we need the Bitcoin world need people like him from the institutional world, because Bitcoin adoption cannot be, we cannot have the Bitcoin adoption, real adoption to the common people without the institutional world interested in Bitcoin. So many they listen to him. He's often in CNBC promoting Bitcoin, so he's making really a great job for Bitcoin. For the listeners, I want to say thanks to Anthony, thanks to Francesco for hosting the 8th episode of our podcast. We will have Tuesday Sam Callahan, that is a macro expert and is working at Swan. And Tuesday after, we will have James Lavish. So the next 2 episodes will be focused on macroeconomics and Bitcoin. They are both very experienced, very knowledgeable, and they explain difficult concept in a very easy way for understanding.
In an easy way.
Exactly. Yeah. But easy, but not like things should be simple, but not simpler. So, for example, Sam is writing long messages, long thread, and it's like you need this, not more, but not less, to understand complex topic like economics. So they really explain in the best way possible, in the most simple way possible. So we are looking forward also for this episode, and like maybe we will have also Bitcoin above 70k. I also pinned our website, Store of Bitcoin. There you can see all the link for our YouTube, Spotify, Apple podcast link. There are also articles that I wrote recently on Bitcoin as a store of value. Would be great if you pin this website, you join our YouTube channel, because we will continue to publish our episodes. Thanks all for the participation, and see you next Tuesday with Sam Callahan. Bye.
Hello, bye.